Right. Hi, everybody. We're back straight into the next session, which dovetails nicely from APIs into payments. The future of payments, a hugely topical subject. So I'm going to hand you over to Liora, who is moderating this panel, and she will introduce you to our esteemed panelists. Thank you very much, Liora, and to the rest of the panel.
Thank you very much, Johnny. Hello, everyone. Thank you for joining our discussion on the future of payments. Let's start with a short introductions of the panelists. Please, guys.
Keren, go ahead.
Oh, hi, everyone. Okay, so I will start. So I'm Keren of Aviasaf. I'm the CEO of PaymentsOp. I have been working in payments area for more than 20 years now. And in the recent years in my company, we're doing advisory projects for fintech companies, for retail, for banks, for payment platforms, for anyone in the e-commerce industry. And we help either with the payment strategy or with the payments facilitation, with regulation, compliance, privacy, anything that an online business actually needs in order to operate successfully in the global markets. I'm also proud to be one of the founders of the Fintech Ladies Israel, which is the community that we founded a year and a half ago. And it's a place to women from financial areas, from cyber and fintech, to connect, to network, to share professional knowledge. And we invite actually all the women in the crowd to join us. Sorry from the guys.
Thank you, Keren.
So I'll go next.
Adam.
I'm Adam Vissing from Ixopay. I've been there for 3 years now. Ixopay is a payments orchestration platform vendor. So an agnostic technical provider that assists very large global merchants as well as fintech companies to integrate with the jungle that is the world of payments. And I'm very happy to take part in this panel discussion today.
Thank you, Adam.
Perhaps I shall go. My name is Lars. I'm working for Ekata. We are a global identity verification provider, which provides unique insights around 5 key elements like name, address, email, IP, and phone. And through our unique insights, we want to help merchants and financial institutions make better informed risk decisions. And I'm really pleased to be part of this panel today. So thank you for the opportunity. Looking forward.
I guess I can round out the panel. Good morning, everybody. My name's Adam Gagen. I head up government affairs for American Express for Europe, Middle East, and Africa. Which is a nice grand sounding title, but basically means I get to speak with a lot of policymakers, central banks, regulators about the good rules and sometimes the challenging rules they write for payments providers. And so we do a lot of work in Israel, but also more generally around the region. And what I'm excited about today is to hear from a lot of the other fintechs on the panel and kind of understand where the world's moving and the fast moving place of payments. So back to you, Liora.
Thank you, Adam. So the coronavirus pandemic has caused a surge in demand for contactless payments, accelerating the shift from cash to digital options. Digital payments are on the rise, increasing financial inclusion, but of course, also raising risks. I wanted to ask you, first question, lessons learned during COVID. What are the implications for fintech companies as you see it?
I'm happy to kick off as potentially perceived as the least fintechy representative on the panel. So as American Express is, we're a relatively large global company. I think we're technically the world's largest global issuer of cards. But actually in most countries around the world, including Israel, for example, we're quite a small percentage of the total payments market, which means we tend to have to approach things in a slightly different way, a bit more of a fintechy way to basically try and fight it out and get people to choose us over other people. And again, we tend to be a little bit more pro-disruption than some of our larger global competitors. In terms of the COVID lessons, I think for us, there's 2 big ones. The first is, I think the world is moving a lot faster than we thought it was, certainly from a regulatory point of view, a commercial point of view, a consumer behavior point of view. All of the trends that we've been seeing kind of come to a peak over the last 10 years have all been massively accelerated. Contactless usage, just e-commerce spend in general, right? Transition away from cash. All of these things that actually made payments and electronic payments particularly so key to people's lives have really been stressed over the last few months. And particularly from my job, where I look at engaging policymakers, the speed with which new regulations have been pushed out, contactless limits raised, overnight almost, instead of taking 5 years like it used to. This really underlines that basically the pace of change in our industry is only going to accelerate. And that's, I think, the biggest takeaway so far. I think the second one, fundamentally, is that at the end of the day, payments aren't just about moving money from point A to point B. It's about a bunch of other services. During this particularly COVID challenging time, there's been a number of initiatives to help SMEs, help consumers either delay payments, get more flexibility essentially over short periods of time to deal with those shocks of COVID as lockdowns are imposed and then withdrawn and then reimposed. So again, I think it's just reiterated to me why payments is so key in actually the whole economic lifestyle you see within countries and people's day-to-day lives. So I think the speed of change is going to height up, and actually the work we're doing is probably only going to become more important. And those are, I think, interesting trends for us to try and battle with as we move forward. So that'd be my two. Liora, back to you.
So maybe I could just tag on to that and say that, Adam brought up the speed topic, and I think that that's definitely one of the key drivers in this situation, right? With e-com demand exploding across really all verticals. For fintech companies specifically, agility is key, right? So anyone who wasn't ready to move fast really fell behind and might not recover any lost ground in this market. So, as a fintech or as a fintech enabler, as we would see ourselves, I think some of the things we had to learn very fast was improving our ability to quickly onboard a lot of new customers, to deal with sometimes huge demand spikes, and react to these rapidly evolving and changing requirements. I think that's really the key in this kind of situation for fintech companies to make the most of it.
If I can add to the things that were said by Adam and Adam, both, which I totally agree. I think that COVID-19 has impacted people's lives in many aspects, as well as where we shop and how we pay. And we see that everywhere, like we see digitization in everything, including payments. And it has been critical for keeping people connected and businesses running and people working from far. I think we have today in the market, since everything got accelerated in the past year, we see more choices for merchants, we see more choices for consumers, and this encourages a lot of technology and sometimes even cooperation between certain services and tools. I think, but that I want to add to that we see like a big advantage for the digital payments. I think the big benefit is the freedom that people see today. We have a freedom to pay with any like payment instrument in any time, in any country, and in any currency, as long as, of course. Okay.
Keren, can you repeat?
Yes, I'm just saying that. I'm saying the big benefit. Can you hear me now, Liora?
Yes. Yes.
Yeah, can you hear?
Yeah. Oh, okay.
Yeah.
So I was saying that the big benefit of the digital payments is the freedom to pay like anywhere in any country and any currency. Of course, as long as you have sufficient funds to support it. But we also see a big like disadvantage of digital payments. Like obviously the biggest weakness of this is the customer privacy. And I'm sure we'll discuss it more as we go along with the panel. But today, businesses can actually track and analyze the customer's behavior, the mobility behavior, the shopping habits, and actually see everything that we do online. I think they use it to market the tools and anything that they want to sell us, but also to do risk management. And we hope that it ends there. So this is like my take on the implications of COVID.
Sure. Thank you, Keren. Lars?
Yeah, also further to the comments of Adam of Ixopay. Yeah, I've spent a good chunk of time during the pandemic where I was still active in the card acquiring sector. And if anything at all, it really clearly showed what has actually still remained to be a challenge to many in the fintech industry, is to board those micro and SME merchants at scale in line with customer expectations through automation. It has even become such a problem that the national branch trade organizations have also brought this problem to the government's awareness, who is now also looking for banks, and which are actually mostly traditional banks like ING, for them to increase accessibility, especially for those small mom and pop stores who are going online. They have no experience. They need a lot of guidance, and they bring relatively low revenue contributions. And this is, I think, why this segment is the kind of the black sheep of the pandemic during the peak in applications. Nobody actually wants to serve them, but they need it the most. So I thought that that's also like a lesson learned, to see, okay, how can we in any future pandemic ensure that accessibility is still broadly available.
Thank you. Thank you, Lars. I wanted to dive deep a little bit into the e-commerce and the challenges of small businesses. As you've said, entering this new line of business, going online, we have. I think it's safe to say that the consumers don't like the friction from the buyer side, and the buyers don't like the friction, of course. And then you have, on one hand, merchants are facing challenges, and customers are facing challenges. And I think the main key here is the authentication process and fraud prevention. And how do you all see the traction risk management and the traction risk assessment, assisting both sides?
Well, maybe I can add on this one. I think it benefits all parties involved, creating a seamless transaction experience for the good customers, while applying more friction through transactions which display a higher degree of risk. There was also recently a roundtable with a broad audience of key European PSPs, and there was actually a clear consensus on the fact that the TRA has proven to be effective on the propensity of being honored, and issuers seem to be managing those quite well across the board, except for Sweden. They don't do exemptions based on TRA.
Okay, thank you, Lars.
Yeah, sure.
I can add a comment to this. Go ahead.
Go ahead, Adam. I'll talk after you.
Thanks. It's always great with time lag between Tel Aviv and London. I was just going to add that I think particularly around that whole conversation on fraud mitigation, again, it's clearly become even more important as, again, these electronic payments have been boosted by COVID. I think there's two sides to that. One is, I think the industry is going to continue investing and innovating to find the best way of protecting their consumers and minimizing fraud. I think as everyone on this call, everyone I'm sure listening more broadly out there in the audience, we see that as a commercial priority, but also to some extent just as a brand and reputational priority. So I think that everyone does whatever they can to try and minimize it. And I think there's some incredibly exciting technologies using particularly machine learning to try and suppress in real time attacks from either organized crime or, again, maybe smaller operators, which continue to, again, be a challenge for the industry. I think the challenge we see, though, is that where particularly policymakers have intervened, whether it's in Israel, certainly in Europe, with things like strong customer authentication, where they have a really great objective, right, to minimize fraud, set some really high standards. Because the industry is moving so quickly, by the time you've written those rules and you've started implementing them a couple of years later, they're often starting to be out of date quite quick. I think that's the challenge that we've certainly seen, for example, with strong customer authentication around Europe. I think there's similar challenges to some extent in Israel. at the end of the day, you know, we're kind of implementing these rules that we're forced to. They're actually causing a massive amount of friction in the system. You know, tens of millions across the industry, probably hundreds of millions of declines of legitimate, good transactions in the middle of a pandemic, just because some rules were written, maybe either in a slightly unclear way or a slightly too prescriptive way. So I think that this ambition to control fraud, invest and innovate has to stay central to the industry. I think we probably need to do a better job of explaining to people who are writing the rules or working together to actually deploy those technologies rather than getting, you know, stuck in a certain way of operating like two-factor authentication that maybe isn't going to be relevant in 5 or 10 years' time.
So I'd say what Adam said. Definitely looking at the specific exemption that was mentioned here, transaction risk assessment. I'd say that, you know, from all of the exemption conditions that were introduced with the SCA requirements, it does represent one of the more esoteric ones, or one of those that where I'd say it behaves more as a black box from the point of view of the merchant or the consumer. So a lot of the decision making process is happening here on the PSP side, on the issuer side, and this is not something into which merchants can get a lot of insight in most cases. So I'd say, you know, of course, maintaining you know, low fraud rates across all transactions is central to any PSP's business. Whether this particular exemption will help in the long term.
I think we lost you there.
Okay.
Adam, I think we lost you there. Adam, can you please repeat your last sentence?
Yeah, so I think, you know, whether transaction risk and analysis will be one of the, let's say, dominant exemption conditions, it does seem like something that, you know, PSPs have an incentive to implement well and to manage well. Whether it will be helpful in the battle against friction, let's see. And as said, you know, technology moves fast. And as Adam mentioned, you know, whether in a couple of years down the line we may have some smarter ways to make these kind of risk decisions remains to be seen.
Thank you, Adam.
Yes, Liora, if I can, yeah, I want to add to that, like, because we mentioned the customers, naturally, we mentioned, you know, the banking institutions, but I want to talk a bit about the merchants themselves, because eventually they are the ones that have to deal on the day-to-day basis with the fraud prevention, with the customer authentication. It is like expected from them to give answers for everything and to take liability for all the processes of the transactions and everything that comes with that. So I think that we are handling like fraud and authentication issues for more than 20 years now. So we know how to handle it, and we have a lot of tools in the market that are helping the merchants and the banks and the customers to, you know, to handle fraud. But I think that today, what we see, like in the past maybe 3 to 4 years, we have seen a lot of different models in the market. There are a lot of marketplaces, a lot of platforms or ISVs, which are giving services to many B2B, B2C, or private customers. And we also have a lot of like payment facilitators today in the market. So all these super merchants, as I call them, they need to handle fraud and authentication, either the KYC or KYB processes today. And it's sometimes it's not like very embedded in their DNA, okay? Because they have this product that they want to give, they have this marketplace or amazing platform which connects buyers and sellers, and they want to give this. Okay, let me try this.
Repeat, please, the last sentence?
Yes, absolutely. I'm just saying that all these marketplaces, they want to give like a better customer experience to everyone that comes inside their platform. But on top of that, they need to embed regulation inside. They need to embed all these processes and to allow everything to happen in a very short time, like not to hold the transactions processing. So I think today we can view in the market a lot of technology based on AI, on big data, and a lot of other tools out there and machine learning also, which gives a lot of leverage to the financial services that are handling all these authentication processes, and they need to do it with speed. So the sophistication of the financial crime is increasing, and we have growing concern of the customers from being victims of fraud. But then it's no surprise that the adoption of all this new technology in the customer authentication is now accelerating rapidly. So this is a good situation actually for the market, and I believe that we will see more solutions out there. Back to you, Liora, if you can hear me.
And maybe, Liora, just before you move us on, I'll just maybe add one other comment, which I think, since again we're talking about FinTech Week in Tel Aviv, I think the really exciting thing that we've seen as, let's say, again, a relatively large operator is how many third parties you can work with around, again, this fraud prevention type area.
We have started
There's
to
so much
talk
innovation
about the merchant side. Yes, yes, we can hear you now. Thank you, Keren.
Sorry to butt in. I think, Liora, your connectivity is very low. It's showing up on the screen here, so I think there's a delay here. I don't know if you can do anything with your internet there. You're probably in the office where the government doesn't provide good internet activity. Oh, there you go. Yeah, try again. But yeah, if you can try, let the panel carry on. Maybe I'll go now.
Hey, Liora, sorry, please continue. I think your connection is out there.
Can you hear me now?
I can.
Yeah.
Okay. Am I online? Can you hear me?
Yeah.
So I was saying that
they can hear you.
Adam is you're correct. Authentication and anti-fraud is definitely no.
Liora, your connectivity, your connection is really bad.
Can you
maybe
hear me now?
let Adam carry on. Let Adam carry on.
No,
maybe while you sort that out.
Should I?
No. Adam, carry on.
Sure, no worries. And we've all been there, right, with challenging connection issues. So we'll struggle through. Yeah, I was just going to add, just since we were talking about FinTech Week Tel Aviv, I mean, one, for example, of the investments we made as American Express, because we have a sort of a ventures arm, was in an Israeli relatively large FinTech now called BioCatch, which works in the space, not just for issuers, but also merchants, a lot of other third parties. I think that's really where we see potentially the future going. You know, we as Amex have sort of one of the lowest fraud rates generally because of our unique model where we sort of do all the connections right between consumers and merchants. But I think even us, you know, we see the great benefit of potentially working and supporting third parties who really can move fast, innovate, come up with new models to really change this space. So I think that's the thing that excites me, that this is a place where there's going to be increasing collaboration, increasing new ideas, and that's an exciting place to see, you know, change to take place across the payments industry. So that was the quick comment I was making. I'm not sure, Liora, if you're back, or Adam, Lars, or Keren wants to pick up on that.
I've actually, Liora's actually has WhatsApped me the next question, so I'm going to ask that. She's asking, e-commerce services accelerated during the pandemic. What are the challenges for consumers and for merchants? And are the consumers sacrificing too much of privacy in the name of open services, lower fees and convenience? And what will be the repercussions for buy now, pay later? Whoever wants to take that one. We'll rush at once. Who wants to take?
I'll be happy to start on this one. So you know, I would say that definitely we see most of the challenges on the side of the merchants, right? E-com and payments generally is a fragmented technology space, right? So there's been a lot of consolidation out there for sure. But still, new players, new solutions keep cropping up on all sides, both on the fraud side, as Adam mentioned, but also on the payment side. So I said I would see this as more of a problem for merchants, simply because the average consumer will typically tend to opt for one preferred method of payment, maybe a couple, right? But for merchants, on the other hand, who have to expand their business online across probably multiple markets, the breadth of solutions that they need to be able to support and offer to their clients keeps increasing. So the effort both on the technical side in terms of implementing maybe new forms of payments, but also remaining compliant with, in Europe, for example, GDPR requirements, or handling all of this diversity in their back office processes in accounting and treasury, that load keeps increasing, right? On the other hand, if we're looking more at the consumers, I would say that large swaths of the population have become more acquainted with e-com over the last 12 months. Definitely a lot of people that had only peripheral contact with online commerce have now been pushed by COVID to spend more time online, spend a larger share of their wallet online. So I would say that brings definitely a growing number of probably less privacy conscious consumers out there. Maybe not less privacy conscious, but let's say less aware of what is possible, what is happening with their data when they are interacting with services whose terms they do not read, sometimes they do not understand. So all this data being collected, analyzed, used to make decisions, on whether to grant credit or allow a transaction. That's what we see in the immediate term, but the long-term repercussions, I think, will only be felt at a later date. Well, looking at some payment trends that have accelerated, if we're looking at buy now, pay later, for example, that is clearly a very successful type of product that is satisfying demand in the market, and this is seen or demonstrated by the growth of the major players in this space. But in my mind, it does also seem like it creates a certain amount of risk in the system when a large segment of our economies find themselves in transition phases, and potential macro problems down the road. So who am I? What kind of consumer am I targeting with buy now, pay later? And are these segments of the consumers potentially those that are most at risk if an economical downturn is ahead? This is one of the questions I would be asking myself at the moment.
Anybody else want to come in on this?
I think I can add to whatever Adam just commented on the buy now, pay later. I think from one hand, as Israelis, we are aware of installments. We are used to installments. Also, I think it's very common in Turkey and Brazil for many years now. So this is something that the system allows us to do, and it's a kind of very nice way to make a lot of purchases and to purchase higher average order values. So I think for the merchants side, it's for the retailers, it's very good. And I think the number speaks for themselves. We see retailers that offer installments for a lot of goods out there. We see that they report higher cart conversion, they report higher average order value. So they're very happy with that. I think also for the consumers, they love it because they can afford to buy things that in another way they might not be able to do that. So I think installments, in a way, it's not that concerning. But if we take a look about a lot of the platforms out there that are there to lend and borrow, which have different rates, different IRR rates, and this might be concerning as we go along, because I think consumers are not really understanding the way that the loans are given. And then we might face a few issues regarding regulation or reputation or anything around that in the future, in a very short future.
I think that's very right, Keren. And maybe just to add, the way I see it is really that both the data kind of handover from consumers, also buy now, pay later, it's all part of the same macro trend, which is fundamentally moving money from point A to point B is going to become a very low margin business over the next sort of 5-10 years. Part of that's going to be driven by sort of API-based payments. Then it's going to be driven by CBDCs or blockchain-based payments. But this idea that you needed a large, card scheme in the middle, signing up consumers, signing up merchants, being able to sit there for the last 30, 40 years, that's all really being disrupted right now. I think that's what's going to be interesting, that as these new models come in, as merchants maybe have more power to be able to say, I'm going to take this form of payment or that form of payment, negotiate fees increasingly. I think that, the people operating those things are still going to need to find a way to be sustainable businesses. So they're going to need to find a way to pay for the protections they put in place, to pay for their big data systems and cyber resilience they're going to need. And I think that's where, whether it's buy now, pay later, whether it's handing over your data so someone can do something interesting with it, that is increasingly potentially going to be something consumers see as a good deal, because maybe they get a bigger rebate from their merchant. Maybe it's going to be something the merchant's going to propose to them as sort of the first payment option on their page. So I think this is going to be a big challenge that we're going to have to deal with as an industry going forward. I think it's going to be up to us to make sure we're all offering clear and good alternatives, both to merchants and to consumers. And I think we also need to recognize that this world is kind of coming, and we need to all change. So even us as American Express, again, seen as the traveler's checks and the credit card guys, we've started launching instant payment products, which again, really, to some extent, compete right with cards that are out there. I think that's going to be the challenge going forward, that we all are going to have to move a bit faster and really reimagine what payments can look like going forward. Don't just keep doing your business the way you've done it the last 20, 30 years. And that's where I think, fintechs are going to be champing people's heels, forcing that change just as much as regulators and policymakers.
Fantastic. Anybody? I've got another question that's come in from Liora, and I think after this we'll have to wrap up. In the coming year, a lot of change will be driven by the policymakers on such areas such as central bank digital currency, digital identity, API-based open banking platform, government regulations. What is the impact on the future of payments? Are they bad or good for financial innovation? Who wants to take that one?
Yeah, perhaps I can add to that one. Taking PSD2 as an example, I think it's absolutely a strong and true driver for financial innovation. Just not right now for card acquirers and merchants, but in the long run it will be. Following the piecemeal rollout of PSD2 and many unexpectancies in the behavior we are seeing, there were no sole strategies fits all which can be applied, as there were different responses and basically non-unification in the rollout in the way certain countries and issuers were responding to calls. It had some similarities to a game of whack-a-mole, where you never know where out of which hole the mole will come up, which you need to hit on the head. So that made it difficult and challenging for merchants also to apply correct strategies on how to deal with it. Actually, I think after all the growing pains fade, it will be very good for innovation in the coming year on the customer authentication, and when all the processes are smoothed and the rails have been ridden for more months than they have now. It should be good for financial innovation.
Anybody else?
Yeah, I mean, I'd say that it's there's kind of two ways to look at this effect, right? So as Lars mentioned, there are definitely situations where regulation is a massive driver of innovation, and I think open banking is one of the best examples of this in the payments domain specifically, right? Would large incumbent banks have taken steps to really present open APIs to the world, to third-party providers, if regulators hadn't forced them to do so? I'd say no. So I think the result, is clearly a win for consumers, for merchants, for the industry as a whole. It creates new options. Of course, in tech, regulation typically tends to lag behind what is actually possible. And in my mind, that's not really a bad thing, because it does create room for innovation. A lot of big technological changes in the last 20 years on the internet and in e-com have been happening in kind of blue ocean type situations where there were neither a lot of players nor a lot of regulators active. So introducing regulation later, once the hype has worn off or the largest aberrations have become readily apparent, typically helps to de-risk certain industry segments and to create a level playing field. So I'd say, if we look at some technology spaces today, crypto may be a space that requires a little bit more regulation than it has. In some places it has already been introduced. And I think it deserves the same attention as do many other asset classes out there. And anyone who's looked at the run for Dogecoin over the last couple of days can probably understand.
That makes sense. And I think particularly that last point, right? Is it good or is it bad? I think you just got to admit that it's a reality. Regulation is going to be here. I would like to recommend that, financial services is pretty diverse, but the one financial service every single voter uses every single day is payments. So politicians are going to care about it. They're going to regulate us. They're going to get involved. I think at the end of the day, we need to recognize that my only concern isn't that they're involved, that just the focus is going to move from technical things to more political things. I think that's much harder, right, for the industry to manage, whether it's things like data localization, whether it's things like sovereignty, autonomy. We're good at working at global companies and working at fintechs that collaborate around the world to do cool new things. Getting involved and having to monitor that political space is going to make it even more challenging to get those business plans out the door. So I think that's the only thing that slightly worries me, that regulation is here to stay. It can be good, it can be bad. But if it gets more political, that's probably harder for everyone on this call and maybe listening.
Great. Maybe a last word from Keren, maybe?
Yes, I totally agree with everything that had been said. I think that as long as we maintain this conflict in a way between the regulators and the fintech businesses healthy and flourishing, then it's a good situation, because then we have the fintech running with the new technologies, the new business models, bringing innovation, bringing everything that they can possibly offer, and then we have regulation running after them, trying to understand where are the pain points and the fraud issues, and then to manage to do some regulation around that. But I think this what makes it interesting, actually, because fintech, when they realize that regulation can be leveraged, and if they use it in order to leverage their services, they will be in a better place. Then we have a very creative solutions that are out there. If they see this as a showstopper, then this is problematic, and probably something with their model is, not good enough to be launched to the market. So this is at least the way that we view it. We try to embrace it and work with it. For, as Adam said, it's here to stay. So
fantastic. We're going to have to wrap it up there, I'm afraid. But thank you very much. A thoroughly enjoyable panel. Please show your appreciation with the emojis on the bottom of your screen to say thank you for sharing your thoughts and insights with us. Thoroughly enjoyable panel, and really great to have such a panel full of experts. And Liora, don't worry, these things happen, especially in government offices. But thank you very much, guys. It's been an absolute pleasure, and hope you'll stick around. Anybody has any questions, hopefully you'll be able to get in touch with them. And thank you for listening, and thank you for being here. Thanks, guys.
Thank you.
Thanks.